And there you have it, the closing bell at the New York Stock Exchange, ending another trading day. The Dow Jones ended the day way up, around 825 points.
Wow, and the S&P 500 and tech-heavy NASDAQ were also up around 3%.
Joining us now is Aaron Weinman, a finance correspondent for Business Insider. Welcome, Aaron. Great to have you back. So what was driving the markets up so high today?
Yeah, look, that's a great question. I think stocks rallied after fresh economic data kind of tempered investors' expectations, particularly in regards to any aggressive rate hikes from the Federal Reserve. As you're aware, investors love certainty and stability, even if that's good or bad information. If they're certain about it, that usually helps. And if I'm not mistaken, today's rally should snap a 3-week losing streak, at least for the S&P 500. But it's important to remember that indices, or indexes, I should say, they bounced after some opportunistic bargain hunting, if you like. Buy investors came in, they sort of swooped in on these cheapened stocks, and this would have contributed to today's rally. That's the sort of big picture. But in regards to inflation, it's still too soon to know whether the rate hikes will cool the economy. But that is certainly the expectation, and that, in my opinion, was also part of today's rally.
So we know that the markets react to news and the overall spectrum of what's going on in the world today. Today, some striking news both in the gun debate and certainly in the abortion rights debate. How much would you or could you say that those two factors played into this?
Oh, wow. It's very difficult to know, to be honest. I think for me, as an international citizen living in the States, it is very difficult to opine on both of those things, be it Roe v. Wade or be it the right to bear arms. It's they're both very foreign issues to me. But in terms of how they impact markets, the first thing I will say, and this has happened in the past when there has been debate regarding gun control. If you have a look, companies like Smith & Wesson and their peers are probably trading higher, but that's probably the most I could say about that. I'm sorry, I don't think I'm well placed to comment on those two matters beyond that.
Well, I guess your point is you don't think that those issues bared on the market at all, really, overall today.
I think it's very difficult to make that assumption.
Coincidence, you say. Yeah. I mean, it's a fortunate coincidence, right?
But, the S&P 500 did, set the index back for a back-to-back day of gains, even though the Fed has warned that a recession is certainly a possibility. What does all of that mean for investors?
In terms of the recession being a possibility, is that what you mean? So I think more importantly than that, before you look at the recession or the talk of a recession, it's important to try and analyze whether there's any let up on inflation, because inflation is going to be a big driver of, and where inflation sits is going to be a big driver of when we end up in a recession or if we end up in a recession. So I think before answering your question, I think it's important to try and dissect whether there's been any let up on inflation. And the short answer to that is not yet. It's clear that consumer sentiment is at a very low point. The mood is quite grim as inflation sort of eats into people's purchasing power. Everything from petrol to paper towels costs a lot more than it did at the beginning of this year. And I think that's going to be a big factor when we talk about entering a recession. Should inflation let up, however, that will provide some impetus for the Federal Reserve. The lower it gets, I think the Fed will be less aggressive with future rate hikes. And by less aggressive, that's essentially a 25 basis point or 50 basis point hike, as opposed to the 75 basis point hike that we saw recently. So I think if you put the two of those things together, that will then determine not just where the markets are today, but when or if we enter a recession.
All right. Well, Aaron Weinman, thank you so much for your financial insight. We appreciate it.
Take care. No problem at all. Thank you very much. Take care.